thank you for tuning in to another episode of 30 to Life podcast, where we redefine the Black experience. We got a really special episode for you today. I'm excited to introduce our guests. But before we do that, got to check in with Brown. You know, he always tired. What's going on, Brown?
I'm not tired today. I am energetic and melanated. No, man, I'm happy, man. What's going on? I'm just happy to be alive. That's all. Happy to be alive. It's rough out here in these streets. No,
Amen.
I know these COVID cases are going up. You know, I know there might be some fear going on in New York City right now. So shout out to NYC and New Jersey. These numbers are going up. So, you know, I'm not saying stay masked up, but just try to stay healthy as possible. You know, drink water, run, you know, do the basics.
Take your vitamins.
Yeah, exactly.
Yeah. And also I want to say my heart's out to the family, to the shooting and yes. Buffalo. You know, it was kind of tough because the day of it happened, like, you know, you go back into work and everything like that, and it's not addressed in like the corporate America. And it's kind of like disappointing, but it's like, you know, for everyone who had to deal with, you know, the next day, just like, you know, acting as if nothing, you know, happened and just getting back into work. My heart goes out to you as well. But yeah, prayers to them. You know, it's a tough time in this country, and, you know, everyone, you know, my prayers to everyone involved and just everyone who, you know, is dealing with this, because, you know, it's just sad, man. And it just upset me. But yeah, I just wanted to say that.
Yeah, and it's the youth, the youth, you know, just be careful what you read on the internet. Like vet everything out. Like consider your sources or where these people are getting their information from. A lot of it is just regurgitated misinformation, and it's causing, you know, the youth to be so easily influenced. And yeah, but let's get this show started. Let's talk about how to make this
all right. Let's go. All right. So we got a special guest. His name is Marcus Whitney, right? Mm-hmm. He is the founding partner of Jumpstart Health Investors. It is the most active venture capital in America. It's focused on innovation, healthcare companies, and he has a portfolio of over 130 companies. So we're definitely going to get into that. He also just recently launched Jumpstart Nova. That's the first Black healthcare venture fund in America as well. So he's definitely breaking stereotypes, building legacies, and just really being a trendsetter in the space. I mean, just a couple other things just to list. He's also the co-founder and minority owner of the Major League Soccer team, Nashville Soccer Club. So it's a lot of things. He's been featured on Business Journal, CNBC, Entrepreneur, Fast Company, The Atlantic. He is a best-selling book author as well. So it's so much that he's doing right now that I'm excited to have him on. So Marcus, thank you so much for coming on the podcast.
Thanks for having me, fellas.
Perfect. Yeah. So for our listeners, you know, I gave a little rundown, but I'd love to hear in your words, like, to tell us about yourself, show some light.
Yeah. So I'm 46 years old. I was born and raised in Brooklyn, New York, but I've lived in Nashville, Tennessee for the last 21 years. My day job is healthcare venture capital. So investing in early stage companies, particularly Black founded and led early stage healthcare companies. We call the stages that we invest in seed and Series A. So that means the checks that we write are generally between $250K and $3 million per investment. And I spent a lot of time supporting those companies, working with those founders, and then also in healthcare, working with the leaders of the industry, a lot of the largest companies in the country, to sort of marry, you know, their needs with the innovation that's out there in the streets.
So give us the origin story. Why did you even get into this? Where did the interest come from? Yeah, talk about that, please.
Yeah. So I'm a long way from the origin, you know, where I thought I was going to be when I was a kid was I thought I was going to be an architect. And then I went to University of Virginia, and I found out, you know, what it really took to be an architect. Not so much the hard work, although I did have a problem with that, but more just like what the work was made up of. And I just realized it wasn't what I wanted to be doing. You know what I'm saying? Like all this meticulous measuring, and, you know, it wasn't what I wanted to do. I was always creative. You know, when I went to college, I ended up majoring in hip hop, you know, and wanted to rap and start a record label with my friends. And, you know, I'm 46. So when I was growing up, we're talking late 80s, early 90s, you know, I went to school in 93. It's kind of golden era, you know. And so I've always been creative. But then when I started having kids and you know, the creativity had to take the shape of making money, you know. And so how I first sort of took the creativity and turned it into making money was I taught myself how to code. I taught myself how to be a software engineer. And that was 2000 to 2001 was the teaching process. So, you know, before we had boot camps and Code Academy and all this stuff online, everyone's saying, hey, everyone's got to learn how to code. This was before any of that. This is when you had to go to the bookstore, get a book, read it, take the CD out the back of the book, put it in the old school computer, things most of your listeners are not even going to like recognize, and teach yourself how to make like basic web pages and basic JavaScript. But it worked, and I got my first job as a programmer in 2001, the day after my second son was born. And that was really the beginning, because once you get into tech, you do get exposed to many, many, many things if you can pick your head up and look around. You know what I mean? And so I wasn't, you know, I was definitely heads down in the code trying to learn and understand how to do it. But I would also have my head up and like, okay, well, who's paying for all this? You know what I'm saying? And like, why are these offices so much nicer than all the other businesses, you know, that I've seen heretofore, right? And why are they making such incredible money? And why are they growing so fast? And that ultimately led to venture capital. That led to me understanding that there was capital being put at risk, investing in companies before they even generate the first dollar of revenue. You know, investing in a person who had an idea to do something innovative in the market. And then that, you know, expanded my view into understanding the world that we live in today so much better. You know, it's like you think about the companies that we use. We're doing this podcast on Zoom. Okay, well, Zoom was venture capital backed. You know, Apple back in the 70s was venture capital backed. You know, all these companies couldn't have existed if somebody didn't put capital up front before even there was a product in many cases. And so that's when I started understanding, oh, there's this whole industry that's not the public markets. It's not the stock market. It's not what we all understand, talking about 401ks and mutual funds and all that stuff. There's just rich people and endowments and pension funds and venture funds that are investing in people with ideas to go change the world. And so, you know, that once I understood that, I never kind of looked back. I've been for the last 10 years down this path of trying to understand that through doing, you know, because there's no degree for venture capital in college. You know, you have to get in as an apprentice and you have to actually do in order to get the skills, but also to build the network to be able to actually, you know, be backable. So that's a version of the origin story. There's obviously a lot more in there. But you know, the main thing was I started having kids. I needed to do something that was different than waiting tables, and teaching myself how to code was the gateway. I still believe it's an incredible gateway, because I think once you really get into software, you can understand the world we're living in today a lot better. That's my view. It's not the only path to do that, but it is certainly a path. And you know, in a world where there's so many barriers to be able to move up economically, software is a really interesting one, where I don't want to say that it's a pure meritocracy, because it's not, but there's such a shortage of software developers out there that if you know how to code, you do have more value in the market, and you can get into places where you can get major salaries, regardless of credentials, regardless of whether or not you look correctly. You know what I'm saying? If you came from the right side of the tracks, if you went to the right school, have the right pedigree, all those kinds of things. You know, coding is a bit of a loophole in the system. So, yeah, that's one version of the origin story.
So you mentioned venture capitalism, and I think it might benefit the listeners to just get just a quick, easy explanation of what venture capitalism is.
Yeah, sure. So, so you have a company, right? So let's just say you guys have a podcast company, right? And you're both the owners of that podcast company. Let's say you own it both 50%. Okay, you're the owners of 30 to Life Inc. And you each own 50%. All right, and you're building this thing and you're trying to make money. But you realize, man, in order to really make this thing blow, we're going to need to have our own app. We're going to need some serious marketing dollars because we got to stand out on like Instagram or Spotify or whatever. You come up with your reasons for what you're going to need to do to get to that Joe Rogan level. Okay. Right. The likelihood of you being able to do that with the resources you have today is pretty low. Now you can do it over a long period of time with a lot of hustle. And let's not forget, even though Joe Rogan was on Fear Factor, it did take him a decade to get to where he is today, right, in the podcasting game. But if you wanted to accelerate the rate of getting to that level, one of the things you would say you would need would be money, right? Mm-hmm. You need capital to be able to invest in things that can accelerate your growth, okay? Right. And that's where venture capital comes in. You would put together effectively a business plan, but in our world, it's typically called a pitch and a pitch deck, okay? And you would have a model that says, over the next 3 to 5 years, here's what we're going to do with the money. You're going to give us $2 million, not give. You're going to invest $2 million in the company. And here's how we're going to use that. We're going to hire these people. We're going to build this app. We're going to buy this marketing. We're going to grow our users and our downloads by this amount, month over month over month. And at the end of the time where we've spent the money you've invested in the company, we will be a different company. We'll be worth more. We'll have more downloads. We'll have more revenue. In exchange for the money you're going to invest, let's just say you were pitching me. In exchange for the money, Marcus, that you're going to invest in 30 to Life Inc., we're going to make you a partner. You're going to own a percentage of the company. Okay, that's the basics of venture capital. So now you start getting into the deal. So the deal is, okay, well, how much money do you want? Right? You say, okay, I want $2 million. Okay, cool. So how much is the business worth, right? Because how much the business is worth determines how much I'm going to get for how much money I put in. And this is where we start to negotiate, right? This is where this term valuation that you hear comes from. It's how do we determine the value of the company? Because today you don't really have anything, right? You have a podcast, you have some listeners, but if you want $2 million, it would be hard to say you're worth $2 million, right? It's more about the promise of what you're going to be in the future. So then we get into this dance of negotiating what the value of 30 to Life Inc. is, so that when I put my $2 million in, I know what percentage ownership I'm going to have, okay? And then we also have to have some agreement about, hey, are we just growing this thing forever and you guys are going to continue to own it? Or are we going to try to sell this thing? Because if I put my money in to your company, how do I get my money back out? And there's a couple of ways I could get it out. You could promise to buy it back, buy your ownership back from me in a certain amount of time at a certain, interest rate or something like that. That's one way to do it. You could say, hey, we're going to all keep owning this thing forever, but we're going to make so much money, we're going to have profit, and we're going to do dividends every year. And so, out of that profit, you're going to get your piece. I'm going to get my piece. Brown's going to get his piece. Boom. That's how we're going to do that. Okay. Or you could say, in 10 years, we're selling this thing to Disney because we see where media is going, and there's a space for a podcast that's talking about redefining the Black experience. There's a void in the market. We're going to fill that void. And in 10 years, this thing is going to be worth $100 million, and your $2 million is going to be worth, let's just say, $20 million. Okay. And so in 10 years, we're going to sell it. You two are going to be millionaires, and I'm going to get a really nice return on the $2 million that I put in 10 years ago. Right. That's venture capital. Does that make sense?
It sounds beautiful.
Well, that's what it is. That's what it is. And listen, there aren't a lot of podcasts out there that are raising venture capital, but there are podcast networks that have raised venture capital. So Gimlet, The Ringer, these may be names you've heard of or maybe not, but they have raised venture capital, and then they exited, right? They sold to Spotify, right?
Yeah, no, that was an amazing breakdown. I think our listeners definitely understand it even further. So I guess the question that I have is more of, you focus on, Black companies, right? In terms of like what you invest in. So I know a major area that we often are missing is funding. So can you take us through that journey on how you went into this focusing on Black companies, and how can any Black owner get funding? So since it's so tough to get in venture capital.
Yeah, it remains tough. Okay, it remains very, very difficult. So I'll start with the last thing you said, and then I'll back into the first thing. So I'll start with how tough it is, right? So the fund that I raised is $55 million. $55 million. Okay, I have to invest that $55 million basically over 5 years. Okay, basically over the course of 5 years. And what I've told my investors, I raised the money. So I raised the money from what's called limited partners in the venture space. I'm called the general partner. I manage the fund. The limited partners invest their capital. I also have to invest some capital into this fund. And what I've told them is we're probably going to invest in somewhere between 18 to 20 companies. Okay, 18 to over the course of 5 years. When we announced the fund in January, which is how you guys heard about us because we were in the press for having announced the fund. When we announced the fund, we already had a database of about 100 companies we were looking at and evaluating. In the 60 days after we announced the fund, we had another 130 submit their information for potentially being invested in. So now we're only in the first year and a half of the fund. We're only going to make 18 to 20 investments. And we're already looking at more than 230, it's really actually more than 250 at this point, companies that have effectively applied to receive investment from us. So even with us existing specifically to invest in Black founded and led early stage healthcare companies, okay? And that's a pretty specific category, all right?
I'm going to get into that one.
Right? Even in that specific category, right? So it's not Black founded and led anything. So that would include podcasts and social networks and fashion brands and music labels. No, just healthcare companies. We already have more than 10 times the number of companies that have applied than we can invest in Fund One. Are you following what I'm saying?
Yep.
So it's still tough. And it's not to say that we are the only place where you can receive investment. Okay, that's not true. There are other places where you can receive investment, but the numbers are not favorable, is what I'm saying. That is what I'm saying. The numbers are not favorable. There is not enough capital that is allocated and committed to invest in Black founded and led companies, period, regardless of the industry vertical. There's not enough capital that's allocated and committed to that. And when you don't have the allocation and the commitment, the likelihood of it going to a Black founder is like 10x less than it going. It's more than that. I mean, it's very, very low compared to it going to a white male. Okay. And these are empirical data numbers that have been measured by Harvard Business School. And you know what I mean? This is like well known in the industry. We've got all the data about where capital has gone for 4 or 5 decades now in venture capital. We know where it goes demographically, right? So if the capital is not allocated and committed as it is in our fund, the likelihood of it going to a Black founded and led company is significantly lower. I would say the only exception to that is if the actual fund manager happens to be Black. If the fund manager is Black, even if there is not a hard commitment on the dollars that have been raised, there's still a much higher likelihood that those dollars will flow to a Black founded and led company. Some of this is because of network. Some of this is because Black fund managers understand the problem and the challenge. But the challenge is far bigger than the number of Black fund managers that are out there. And quite frankly, Black fund managers also have a problem. We don't get that much in terms of funding to be able to invest. You know what I mean? So this is a multi-decade, depending on your context of history, obviously it's multi-century, but venture capital is not that old, right? So certainly in the context of venture capital as we know it today, this is a multi-decade long challenge in terms of making sure that we have access to the capital. Fair and equitable access to the capital, right? Fair and equitable access to the capital.
Yeah, no, it's definitely so true. I think in all aspects of business in general, and you have a fund that's very niche and really down to healthcare and early stage, and it's even an issue when you get to that granular level. So it's definitely, it's improving slowly but surely, but it's still just an issue. So can you talk about a little bit of what you look for in the companies when you're investing?
Sure. Yeah. So healthcare is, so one of the reasons why I think I was able to raise the fund so successfully is because it's so niche, right? Because I found something that is very specific, but it's actually a pretty big market. So healthcare, we just need to talk about markets first, because when you invest, the size of the market matters. Okay. How big can any given company in that market become? You follow what I'm saying? This is really important for us to understand, because I think a lot of us, when I say us, I mean Black people in America, right? A lot of us tend to think about the things that we have been hyper exposed to, which generally are entertainment. Okay. And many of the entertainment verticals we think about, music in particular, are really, really small markets, compared to a market like healthcare, which is the largest market by GDP, gross domestic product, in the American economy, right? It's 18%, projected to grow to 20%. Half of it's paid for by the government, through Medicaid and Medicare. And then, the government also sets the rates for it. And so everyone else pays by the rates that the government, plus, against the rate sheet that the government sets for it. Everybody needs it, right? There's 100% usage of this particular product of healthcare, right? And you can't say you didn't use it, because everybody who was born has used it. So everybody's using it, at least at birth, is using the system, okay? It also happens to be the number one employer as an industry in the country. So in any given state, if you go to see who's the number one employer in that state, it's almost certainly going to be a health system. Okay. They employ the most people, right? And this is not just doctors and nurses, it's also janitorial staff. And you know what I mean? It's the whole enterprise of healthcare is a major, major employer in the United States. So big market. Okay. Big market. Go ahead.
Would it be safe to say that that's why you entered, I guess, that specific sector, or was there some underlying reason?
The underlying reason was geography. So people think about Nashville largely as music city, specifically country music, and that's the brand that it projects to the world for the benefit of tourism and media. And that's great. That's a very smart thing for a city to do. It should figure out something that's going to work for tourism and media, right? Right. But if you were to actually look at what is the makeup of the economy here in Nashville, the number one industry here is healthcare, right? Back to everything I just told you. The number one industry here is healthcare, not just for all the reasons I told you, but also because in 1968, 67, a company called Hospital Corporation of America, now known as HCA Healthcare, was founded here. And this is the first for-profit health system. So they are now today, even in a very fragmented market, they are the largest for-profit health system in the country. They basically represent 5% of all the hospital business in the country. 1 out of every 20 babies is born in an HCA hospital. And there are many other companies, we're talking 500-600 other companies that have sort of built an ecosystem around that first company that was started here in 1968. So this is actually a healthcare city. So now we're going to get into why I actually started, the Healthcare Venture Capital Fund, because I live here. When I went to get into venture capital, I had to pick something I could be successful in. Nashville could not be successful as a pure tech venture capital city. At least not when I was trying to start 8-9 years ago, right? Because we couldn't beat the coast. We couldn't beat Silicon Valley. We couldn't beat New York, and we couldn't beat Boston. So I wasn't going to be able to raise the funds. I wasn't going to be able to get into the best deals or any of that kind of stuff. But if I picked healthcare, we had a distinct advantage, right? That anyone who knew healthcare knew. And so that immediately, just by picking it, quite frankly, just by saying I'm going into healthcare venture capital, that immediately put me on the insider track. Then it was a process of utilizing this geography to build an incredible network. So if you look on our fund's website, you'll see our strategic partners that we have that are investors in the fund, and they are the biggest healthcare companies in the country. HCA, Cardinal Health, Eli Lilly, the American Hospital Association, they're all investors in the fund. That is largely because I'm in Nashville. And I have the relationships. And over time, because I've dedicated myself to the industry, I've become an industry expert. I understand how this industry works at a very, very deep level. And so that's important. You can't really be a successful investor if you don't understand the industries you're investing in. That's not real, you know?
So let's bring it back a little bit. Like you said that you.
But really quick, am I going too deep? I'm trying to keep it. I'm trying to make sure I'm keeping it like at a really accessible level.
No, perfect.
We're good, right?
This is perfect.
Yeah, this is one-on-one.
Okay.
You got it.
Yeah,
Okay,
yeah.
Cool.
So let's bring it back a little bit because I think I heard you say that you didn't go to school for this. Like this is something that you
I'm a
had to
college dropout
learn on your own. So like how does somebody even learn to get into venture capitalism?
I mean, so here's the wonderful absolute truth. It's 2022. We have this amazing thing called the internet. Anything you want to learn, you can learn, and really nobody can stop you. You know what I'm saying? There used to be. I absolutely remember a time when, in order to learn, you had to go to a building called a library.
Yeah.
And you had to know the Dewey Decimal System to find the book on the right aisle. And if the book was taken out, too bad for you. You're not learning that today.
Yeah.
That's the end of you trying to learn that thing today. You're not learning it. You know what I'm saying? You wanted to access an old newspaper? Okay, go to the microfiche machine. No, most of your listeners don't even know what a microfiche machine is. You follow what I'm saying? So it's like, the access is there. It's all there. It's all on YouTube. It's all on Wikipedia. It's all on Google. It's all on a book that you can buy on Amazon and have on your Kindle for like $3. There's not a single piece of information about the healthcare industry. The government puts it all out there. You know, whatever.gov. You know what I'm saying? Like if you just sit there and read, you could learn it all. So now we get into where do we spend our time and attention? Well, the stock market tells us we spend our time and attention on Facebook, Twitter, YouTube, Netflix, Spotify, right? Those are not really the Now, Spotify might be the exception to the rule insofar as they've got podcasts and you can like learn from podcasts. But all the other things I just mentioned, that's not where you learn. That's not where you learn. So it's really about the discipline to study, right? It's about the discipline to study and the discipline to study over a sustained period of time. So can you learn healthcare in 1 year? Unlikely. You also can't get a degree in a year, right? So you got to string together years of learning to get here, right? I'm 46. This is, you know, you asked my origin story. This is, in terms of my healthcare story, this is 8 pretty dedicated years of just like, and being in one of the healthcare capitals in the United States and building the relationships with the leaders of the healthcare industry across the United States. This is 8 years of that. So, you know, I'm probably approaching my doctorate.
Yeah.
Unofficially.
Yeah.
You know what I'm saying?
Yeah, it reminds me of Outliers. You hit your turn 10,000 hours, so you're a master right now.
No question.
So one thing you mentioned is relationships. That's very important in any type of business that you're in. Can you talk about how you actually built those relationships with those healthcare leaders? Like what was your X factor, or what did you do to build the relationships to ultimately grow your fund?
I threw quote unquote a party. So I saw an opportunity where there was not a healthcare innovation conference in the healthcare capital of the United States. So I threw a conference for 4 years. And in the first year, we had like 600-700 people. By the fourth year, we had 2,000 people. And in the fourth year, I was interviewing on stage the CEO of HCA.
Mm-hmm.
Right. So I quickly became, because I threw the event, I had to, you know, when you throw an event, it's not just marketing to sell tickets. You got to invite people to speak. Well, then they want to know, well, what is this thing about? And then you have to sell them on what it's about. They get to know who you are. So now you build a relationship with them, you know, and now these are people who are investing in my fund now. You know, this has been a long process of them getting to know me, them getting to trust me, you know, and not trust me because I'm like selling them something. Trust me because I say something and then I do it. And I say something and then I do it. I say something and I do it. And after a little while, when they look at me, they go, that's a guy who says something and then does it. You know what I mean? So if he says something, I can turn my back and trust. When I turn around and look at him again, he's going to be doing it. But again, it takes time. You don't get that immediately. You don't get that day one. You don't get it day 365. You get it day 10,000, you know?
So talk to us about Nova. What's going on with that?
It's a $55 million fund investing in Black founded and led healthcare companies. It's, the name Nova is from the Latin meaning newly visible star. And the idea is that these great Black founders in healthcare have always been there. They're just now newly visible to us, but they've always been there. It's just like when you look up in the sky and then you see like a shooting star. Well, that star's been there for years. You're seeing the after effects of that, right? So that's the symbolism of the name Nova. Jumpstart's the name of my enterprise that I co-founded with my partner Vic Gatto. And so, we have 3 different funds. They're all Jumpstart something: Jumpstart Foundry, Jumpstart Capital, and Jumpstart Nova is the latest. I run it. My partner, Catherine Cooper, she's based in LA. She used to run a pediatric device accelerator that is at Children's Hospital of LA. And she's awesome. She's up in New York right now with a future portfolio company. We've got 5 companies in the portfolio. By the end of the year, we'll probably have 8. We spend a lot of time with our founders, on the board of half the companies, have very close relationships with them, celebrate good times with them in hard times. It's a lot of work, but it's fantastic work. It's incredible work to be with people who want to dedicate their lives to change the world and to back them, to back them in a material way, to write a check. That's like significant, $2 million check, $3 million check,
So I'm a nurse and I've been in healthcare since 2012. Mm-hmm. So I've seen a trend and I'm curious, so if you're funding healthcare companies, where do you see healthcare by 2030?
Wow, that's a really hard question. But since you are a nurse, I can tell you the number one issue right now is the workforce shortage. You know what I'm saying? The combination of the Great Resignation and also just the significant trauma that all clinicians, but probably none more so than nurses, experienced throughout the pandemic, in addition to the fact that they were already experiencing what smarter people call moral injury, but fanatics kind of call burnout, right? You take all those things and we're now in a situation where we're going to be over 1 million nurses short. We're running out of specialist doctors. There's not enough new people entering the medicine field. This is a massive problem, right? Because people are going to find out they're not going to be able to get seen in their city for things. They're going to find out there's not enough nurses. There's not enough doctors to actually perform the services. So we're in a bit, like we are in so many different areas. We got climate issues, we got political issues, we have so many issues in this country. Well, another issue is the workforce shortage in healthcare. This is a very, very big issue. And so that's probably the number one issue in healthcare. And a lot of innovation is headed towards that, trying to figure that super big problem out. So that's probably number one. And then I would say, the other big category. And by the way, just as you guys are going to release this very quickly. I mean, last week we just had a week in the markets for the record books, right? I mean, we are almost certainly headed into a recession, okay? Yeah. And we're almost certainly headed into a recession. Yeah. And so healthcare is generally speaking pretty insulated from recessions, but it's not recession proof, right? So there will be things that get impacted, and one of the things that I think is going to be immediately impacted is the private sector backing advances in science. So we were talking a lot about new therapeutics, digital therapeutics, cell and gene therapies, all that kind of stuff. Man, that's about to be rough. That's going to get scaled back for about 12, 18 months. It's just the reality. The market is only going to put its money behind, this is a general sense. It's not every single case, but generally speaking, unless it's a productive asset, meaning it's generating revenue and profit at a good clip, it's not going to get backing. People are retrenching big time. So workforce shortage, and then we're getting a pullback on the advancement of therapeutics, but value-based care, figuring out how we can deliver care that costs less, quite frankly. That's another really, really big trend that's continuing to grow. Really was growing around Medicare Advantage, but now you're seeing all sorts of different alternative payment models emerge on how to do that, because we're spending too much money on healthcare in this country. We're spending too much money on it. Okay, it can't just be going from 8 to 10 to 12 to 14 to 16 to 18 to 20% of the GDP, and no one says, hey, this is actually a problem. You know what I'm saying? Like, so moving into value-based care is a really big theme. There are others, but now you start to get into things I think are less universal. Those are two universal things.
Got it. So you hit let's say about 21 years, right, since you pivoted into technology, and 10 years doing the fund. And I'm curious, in terms of your journey, what's something that you learned about yourself, and then what's something that you wish you learned before you started?
Those are good questions. In terms of what I learned about myself, man, I learned a lot about myself. One of the things I constantly reflect on, especially in the wake of what just happened in Buffalo, man. Look, luck plays a factor. Any given day, you never know. You never know what's going to happen out here, man. And so the fact that I'm even here, I've been Black in America all my life, right? So I've had close calls. And luck that I've been lucky or blessed or whatever the thing is you want to say about it, definitely fits in there. Now, having said that part, I'm pretty resilient. I'm pretty driven. I'm pretty focused. I'm not afraid to stand out and to do something completely different. Especially as a Black man, I'm very, very comfortable doing different things. I just am. And really with every day that passes, I feel more and more certain that I have, a gift to deliver to the world. And I don't mean like a one-time gift. It's just like, when I show up and I'm in an environment, I ought to be able to contribute something that is unique to what I can contribute. You know what I mean? I can add my ingredient to the grand recipe in a meaningful way, right? So not I'm the best and everyone is lucky to have me around, but I matter, and what I bring to the table is unique and really, really valuable. And I need to remember that. So that's kind of what I've probably mostly come to understand about myself.
Were you always so confident?
My mom did a good job. She did a really good job. I was not always so confident, but deep in there was always the refusal to cower, I would say. You know what I mean? And that's sort of the most important thing. You got to be able to get up when the chips are down, right? You can build confidence when you have successes, but how resilient are you when you get knocked down, or when people don't care about your successes and try to belittle you? That's to me, that's actually much more important. Because if you lack that, you can be set back in some really serious ways in those moments. And she did a very good job of protecting me, not giving me the things so I would protect myself, so I would not allow that to happen to me. Yeah.
So, I guess so should we go into the question of the day?
Yes.
Okay. All right. Let's do it. All right. So last question. So this question right here, you might have to think about this one too. this might be a tough one to chew because it catches everyone off guard. But how are you redefining your Black experience?
I don't think that one's too tough.
Okay, all right.
Yeah, I don't think that one's too tough. I mean, I think, look, based on the inbound that I am getting from the world, it's really interesting. We're in this digital world where people can get to you, LinkedIn, Twitter, or email. There's so many channels by which people can get to you. Based on the way that people are coming to me, there's something I'm doing that's different. There's something I'm doing that's different.
Yeah.
And when I look at the body of work that I've put together thus far at this page in this chapter of the book, it's hard for me to look out there and find a replica of it. I feel like I'm a pretty defensible one of one. So, that doesn't feel hard for me. You know what I mean? That doesn't feel hard for me.
Absolutely.
I don't know if that's the answer you were looking for.
No, it's perfect.
More colorful, but I just, that when I wake up every day, you know what I mean? And again, like a lot of this is, it's like, it's like that J. Cole song, Love Yours. You know what I'm saying?
Mm-hmm.
It's like, there are people out there with more money. There are people out there with lots of other things.
Yeah.
But man, I wake up in this body, with this life, with these goals, with this body of accomplishments. I gotta get off this podcast.
Yeah.
So I can get with my family and my friends to walk out of my house 5 minutes to the stadium for my Major League Soccer team to watch them play tonight.
Yeah, I get it.
I mean,
yeah,
I'm okay. You know what I'm saying? Like, I think that's redefining it a little bit. You know what I mean? I think it's redefining it, and I'm not trying to stunt or anything else. I'm just saying, like, it is a contribution to the redefinition, no question.
What I was gonna say is you to me embrace your uniqueness to a level that I never even thought people did it, but you have, like, you understand that you are a one of a kind, like you are unique. And because of that, like, nobody else can ever do what you can do because of the simple fact that you are unique. Yeah,
no question. That's it. You know what I mean? That's it. We are, the reason why it's such a great last question is because we are at a deficit for imagination. We're creative, but we lack imagination. So we struggle with seeing new pathways to success. So there's a lot of creativity, but it's creativity that's largely replicating models that we've seen previously, right? And there's so much more room if you actually use your imagination.
Yeah.
You know what I mean? And we all have it. All have it, right? It's like, man, what happened to imagination?
Yeah.
What happened to imagination?
The system, the structure,
they're
just ingrained.
Yeah. So it's like, so we gotta figure that out, man. We gotta figure out how to get people to create from an imaginative space and to not be so obsessed for immediate gratification or immediate positive feedback. I think that's one of the problems. I think one of the problems is that with these social networks, you post something and then you're like right there looking at it for, have the likes rolled in, have the comments rolled in. Like, you're looking for affirmation that this thing you just put out is a winner.
Yeah.
And it's like, man, that real imagination, real invention takes time. And for a long time, people are going to think you're crazy.
Yeah. The key word is delayed gratification, right?
Delayed gratification, man. You got to have a vision. So sneak peek. Okay. The next thing I'm working on is becoming a jiu-jitsu world champion.
Yo.
At 46 years old.
Yo.
It's wild, right? See, it's like, it's wild. It's laughable right now.
Yeah. No, I'm not laughing at you. I'm just
laughing.
Because
but like,
yeah.
but it's like, whoever heard of that, right?
Yeah.
But I'm working on it. I'm working on it. You know what I'm saying? I'm
Yeah.
working on it. That's what I'm working on now. You know, I'm enjoying the soccer thing, but I'm not working on the soccer thing now.
Yeah.
Yep.
Yeah.
I am working on the fund. I have to work on the fund. That's my primary job. But like in my spare time, everyone has spare time. In my spare time, I'm training to be able to compete at a world-class level in martial arts. You know, so it's like that's pretty imaginative.
Yeah.
Yep. Definitely. Yep. 100%. So, Marcus, this has been amazing. Thank you for taking the time to let us into your world.
Yeah.
You know, I mean, just from teaching yourself about coding to pivoting in your career to, you know, finding the opportunity and healthcare to starting a conference to build the relationships, right? Networking 101, to launching this fund, $55 million fund to help our people continue to be innovative and grow and just impact, you know, one of the areas that everyone experiences, which is healthcare, you know, is truly a blessing. And, you know, the moment I saw what you were doing, you know, it inspired me, you know, and I definitely wanted everyone else to like hear your message, right? Because as you said, like we're so concentrated in, you know, maybe two markets, right? Sports, entertainment, right? But like someone like you need to be, you know, showcased and, you know, create other leaders who do it in, you know, other industries as well. So thank you so much for sharing, giving us the time, and really appreciate it. Lastly, where can people find you to stay up to date with what's going on with Marcus Whitney?
Yeah, so, you know, I'm pretty much Marcus Whitney on all the social networks, but what I would say, man, is, you know, and this is not me trying to sell it, but I would say, if you really, really want to like know my story or whatever, like I wrote a book. It's called Create and Orchestrate. You can get it on Amazon. And it's far better than I could even give you, quite frankly, in this podcast. It's like, you know, it's 250 pages. I spent 5 years writing it. And it goes into everything we talked about, but like, you know, at a level of depth that you can sit with and go through over a year with your highlighter or whatever. So, you know, I definitely want to encourage people to at least check out the book. It's got 5 stars, and you know, in terms of ratings, or 4.8 or whatever. But that would Create and Orchestrate on Amazon. I would definitely point to that. But if you have to come look for me and realize that I hardly have time for anything, then Marcus Whitney on any of the social networks, and you know, you can reach out.
And it'll be in the show notes, everyone. So make sure you check out his book and follow him on social media.
That's what's up.
All right. So this has been another episode of 30 to Life podcast. It's your boy Mookie.
And your favorite color in the world, brown.
30 to Life. We out.
Peace.